We're actually not seeing too much of a drop in demand in general, right? And I think a lot of it has to do with the fact of what you've just noticed, right? If there is a lot of Chinese demand, it's investor activity, and it comes in on the much higher end, right? In terms of the market as a whole, Chinese buyers are not moving very much, right? It's low inventory that's really driving things there. When we did look at, say, what happens to Chinese buyer activity, say with the devaluation of the yuan, what happens is not an interest that pulls back in terms of how many investors are coming to the area. What changes is the price point that they're looking at.
Right. Stephen, same question to you. Are you seeing a drop-off in Chinese interest? And if so, in what segments of the market? I take it, Skylar's exactly right, that their activity tends to be concentrated at the million-plus price point.
Yeah, I think Skylar's got it spot on there. What I am noticing with my feet on the ground here in the field is that I am seeing a difference in price points. Whereas it used to be 2 to 3 million, maybe even higher than that, up to 5 million, I'm now seeing more of the 5 to 600,000 price point range. And what that means is I have to go outside the city. I have to go, like for instance, an hour north, and we start looking at houses in that regard. What my clients have been saying, it's not necessarily tied to the devaluation of the yuan as it is to currency controls becoming even more restrictive than they were even 6 months ago. And I think this kind of had to do with the start of these trade tensions right now.
Are prices overall in the Seattle market, and take it out of downtown and widen it out a little bit to the towns out there, are they coming down, or are they just not going up as fast?
Yeah, it's the latter,
my opinion,
right?
Skylar, why don't you take it first?
Skylar.
Yeah, I'll jump in here, yeah, for sure. No, Seattle prices by no means are beginning to come down. If anything, we're still up there in the double digits in terms of home value appreciation. Slower than we have been for the previous few years that we've been in the double digits, but still at a very rapid pace, faster than national and faster than actually many major metropolitan areas across the U.S.
Stephen, same question to you. Do you see that?
Yeah, and I would add to that I'm seeing a flattening of the market. As Skylar said, it's not going down. And I think flattening of a real estate market, especially with as much frenzied activity as we've had, is a good thing. I think it's a positive thing. Yeah. I think it deflates some of our theories of a bubble. I think it's healthy all around. We have an unbelievable economy here, just a booming economy. And I think that we're definitely not going to be declining. We'll just be appreciating at a slightly lower rate.
This time of year, go ahead, finish your thought.
Yeah, what we've been observing here is it's really driven by economic fundamentals, right? Like a lot of demand, and it's really hard for supply to respond. It's really hard for us to build more units in this area. That kind of dynamic doesn't pop, right? That dynamic slows down as demand exhausts itself, or maybe as supply finally responds, which it's not really looking like that's happening.